Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we're going to be doing a full analysis on the December production results from the Bitcoin mining stocks we cover on the channel. We've welcomed back Anthony Power to give us his insights, walk us through his analysis, and some of the standout players for the month of December. Now before we get into that, please take a second, hit the like button, you guys. It's 100% free to do. It really helps myself and this channel push this content to other people who may find value. If you're not already subscribed, McNallie Money, feel free to join. And let me and Anthony know in the comment section below which of the miners you're currently holding, which one you thought was the standout for December, and your expectations moving into halving and 2024. Now with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we're going to be providing a full recap of the public Bitcoin mining results for the month of December. We've invited Anthony Power back to walk us through his famous tables and charts. Now, we put a video out last month very similar to this and talked about what each one of these charts represents, how the numbers are calculated, and why they're important metrics. So if you guys are watching this video and you want a little bit more context, feel free to go back and take a look at last month's summary. Now in today's video, we're going to be walking through these charts, but before we get into it, we quickly wanted to address the ETF drama that's been going on over the last 48 hours. So Anthony, last night we had a fake out from the SEC who's told us only to get their information from the SEC. They apparently were hacked on X. They weren't using two-factor authentication, which they've preached to their users. Honestly, you couldn't make this up or write it any better. So we've now found out from the SEC that that was a hoax. The ETF was not approved. They now expect ETF approval at 6 to 8 p.m. Eastern time today. Anthony, what have you been hearing in relation to this ever-evolving saga here?
Yeah, I mean, it was a saga last night, and obviously the Bitcoin price was affected. Firstly, with the potential good news that came out, we saw a spike in the price heading towards 48,000, and then as soon as the statement was retracted, we saw it drop right down then to 45,000. So, yeah, these sort of news streams, can impact the price of Bitcoin. I'm still hearing today. I mean, I think if you'd have said at the start of the week what was a likelihood day for approval, people were sort of honing in on the 11th, on Wednesday today, the 10th, with a start date for commence trading on the 11th, and I believe that's still in play. We're still seeing on news reports that some of the fund managers are at CNBC waiting for the green light to go ahead, so they can then start giving more information out publicly about what's going on. So yeah, unless something really changes the mind of the SEC, I think we'll still get approval today, ready for start trading tomorrow morning.
Yeah, I sure hope so. Never a dull moment in the world of Bitcoin. And I think the most ironic thing of it all is now Elon Musk, who controls X, is investigating the SEC's X account after he was investigated by the SEC. So like I say, never a dull moment. But with that being said, we're eagerly awaiting tonight's announcement one way or another. Now, Anthony, I know you just sent over all the charts. We're going to throw those up on the screen as we talk through this. December was a phenomenal month, so we've actually put out a few videos already talking about some of the individual company metrics and performance attributes for the month. But generally, across the board, we saw higher transaction fees. We saw the companies able to outpace the rate of network difficulty growth. And a lot of these companies were putting up very, very positive months. A lot of them had some of their biggest mining results to date, including Marathon, obviously, which had a phenomenal 1,800 plus Bitcoin. So I'll flip it over to you, Anthony, and we can start to dissect what we saw in December here.
Yeah, so just to give you an overview of December itself, we saw, again, the network difficulty increase by 6%. That effectively means if the hash rate for each of the companies stays the same, they're actually achieving 6% less in Bitcoin. But aligned to that, we saw the price of Bitcoin increase from 37,700 back in the end of November to finish December at $42,265. So that's a nice increase. But the transaction fees for December, which were an additional 20% on top of the block rewards for the majority of miners, and actually some miners, Marathon in particular, because they've got their own pool, were able to achieve closer to 22% increase in fees. And so really, if you look at what the performance was like during December, most of the miners were able to achieve a higher Bitcoin per day than the month of November. So that's really positive, especially when we've seen that difficulty increase, and because the price of Bitcoin was increasing as well, you saw additional miners joining the global hash rate, because if Bitcoin price is getting to 44,000 it is now, that might make it more profitable for some of the less efficient machines to go out there and mine, so the global hash rate just continues to rise. But really, if we look at December from a miner perspective, there was only one winner in December overall, and that was Marathon Digital. 2023 was a good year for them, achieving their target of getting to that 23 exahash. It took them longer than they originally planned, but they got there. They got their joint venture set up and fully operational now in Abu Dhabi. They've got another joint venture in Paraguay that they're working to. They've announced some big growth plans for this year. They've also changed their strategy from that, 18 months ago, it was the asset light model that they were using. Now they're looking at, having infrastructure like, the majority of other miners. And I put that down to a control perspective. When you've got your own facilities and you're looking after your own machines, you look after them better than they would be in a hosted environment. And that's just a given. That it's a bit like how you treat your own home and how you treat a hotel room. Like maybe sometimes you maybe not tidy up your hotel room as much as you tidy up your own home, and that would apply again here. Yes, there are contracts in place to say that there's got to be an uptime achieved each month. But if you've got a host miner who's got their own mining machines, and then they've got hosted mining machines, and there are issues with both sets of miners, I'd like to think that the host would be fixing their machines first. And that's where you see some of the miners who've been hosted, their production, by exahash hasn't been as good as the peer miners who've got their own facilities. So good change for Marathon in that perspective, and they'll obviously grow into these new sites they've acquired in Texas, so significantly big sites in Texas they've just purchased there. But yeah, a massive amount, 853 for the month of December. That was, over 660 more than its nearest rival, which was Core Scientific. And so, that put, as I said before in a previous podcast, puts them in a league of their own.
And sorry, Anthony, that's 1,853, right?
1,853 for the month. So broke a record for them in terms of when you look at the production by exahash, that gave them 82.7 Bitcoin per exahash, and the nearest rival was only managing just under 72 per exahash. So a massive increase on the nearest rival, which in December's case was Bitfarms. And we know Bitfarms, generally put out the most consistent returns. Them and Hive Digital are probably, two of the most consistent miners month after month, nowhere near Marathon's results for December. And, hopefully they can carry that through now. But if you look at the whole season, it's been a bit like, I come from the UK, so my analogy would be sort of like Marathon being the biggest miner, a bit like Manchester United is the biggest and most valuable football team in the UK, but they're not having a great season at the moment. And Marathon's overall season in 2023 wasn't as great as some of their peers from certain metrics. So, but if they continue to do what they did in December, then 2024 is going to be a fantastic year for them. The other thing about Marathon is they go into that halving with a significant war chest at the moment of about $1 billion in treasury. So whatever plans they've got to purchase miners, and we've seen some of the big orders go ahead, but $1 billion is going to get you some significant, options to look at going into that halving. So they're really set up there well. Looking at other miners, as I say, it was a really good month for all the miners. I mean, going through the list, we've got Bitdeer. They mined 434 Bitcoin in a month, and that was, a higher rate than they did in November. 4.2% increase in December. They've got a couple of sites that they're developing that will come live in 2025, some big sites. So they've got some big plans to grow their self-mining hash rate. And they've also got 3 other services. And we don't stress this enough on the podcast. I've spent the last 3 years looking predominantly at the self-mining data and, articulating how the self-mining data performance between miners. And I might be giving some of them a little bit of a disservice. So, you look at the likes of Bitdeer, you look at the likes of Hive, you look at the likes of Hut 8, you look at the likes of Riot, who've got a hosting, you look at the likes of Bit Digital, who've just announced a fantastic HPC deal taken through 2024 for 3 years at a significant amount. And these miners have got more than self-mining. So 2024, we need to work out how we're going to start incorporating this data so that people see the whole picture. Because at the moment, I do put it in my articles, maybe as a paragraph to sort of say that they introduced this new agreement, blah, blah. But we probably need to do a little bit more. We probably need to look at how we can sort of come up with some metrics that include what they're doing from a revenue perspective each month.
And Anthony, I would encourage the viewers here, you guys, leave a comment below on how you think this would be best to visualize or incorporate. And just a shout out to Bit Digital too, Anthony. I saw right before the meeting today, they actually increased the projection from, I think, 35 million to 50 million on that 3-year agreement. So you're totally right. These are meaningful revenue streams that need to be represented in the analysis. So we'd be curious to hear your thoughts below, guys.
Absolutely. I mean, if you're saying 50 million a year in revenues, and they did say 35 was at the lower end of their expectation, so they've come out there and been a bit cautious with their update. But as you get into a deal and the servers have arrived now, the servers are being installed, as we speak, and are probably be operating shortly. If I just look at 2023 as a whole for Bit Digital, they achieved something like about 46 million in Bitcoin mining revenues for the whole year. And you're now telling me that 50 million is a HPC contract going forward. So they really sort of look at that diversification. And Bit Digital, with their current hash rate of about 2.5 exahash, which they've grown quite nicely over if you look at what they've done in the last 12 months, they've literally doubled their hash rate in 12 months. And miners would have had to have doubled their hash rate in 2023 to keep up with the global hash rate. They've got a plan to get to 6 exahash in 2024. So again, that's another doubling. So they're not holding back on the Bitcoin mining, but they're looking at other areas. So, if we look at, what Bit Digital are doing in regards to diversification, so growing that Bitcoin hash rate to 6, looking at the HPC side of it, growing that to 50 million already, I mean, that is just an awesome piece of news we received today. And that sets them up really well. And we haven't even got onto the fact that Bit Digital have been, they've been cautious growing. They're not going out there and spending, tens of millions on mining machines at the highest price. They've been out there purchasing when it's been the best time to purchase and growing their hash rate without having to go to the debt markets. So utilizing effectively more of what they can, raise, in-house. And they've got a significant amount of cash and cash equivalents in their treasury. So I think their treasury is about 85 million as at the end of December. So again, they're not the size of Marathon Digital, but for the size of company, there's not many other companies of their size who've got that sort of a war chest treasury going into the halving. And that's only going to increase, as we go forward, because, they're doing a lot of good stuff with their Ethereum in terms of staking their Ethereum. So they've got quite a significant amount of Ethereum on their balance sheet. They stake that and they get paid rewards for that. They've got the HPC. They've also got the Bitcoin mining. So really positive, really positive for Bit Digital at the moment. Bitfarms, we talked about Bitfarms. They've just been, probably the most consistent miner in 2023. And in a week or so's time, I'll have my year-end review report, and we'll do a podcast on that there, which covers the whole year. But again, December, another good year another good month for Bitfarms. They mined 446 coins, increased their November daily production by 10%. Again, down to the increased fees, down to the increased price of Bitcoin. And they've got their capacity up to 6.5 exahash at the moment, so a slight increase in that there. The only little bit of a concern we've got is the operational hash rate at the moment. It's about 5.5 point. I think that's actually about 6.2 actually. So 6.2 is their operational hash rate. So they're not getting to they're not maximizing at 6.5 at the moment. Once they get to that there, that'll bring even more Bitcoin in, and they'll be even further ahead in some of the metrics than they are at the moment. For the year, they mined just under 5,000 Bitcoin for the whole year. So that was a good total. They've got 804 Bitcoin in their HODL at the moment in their treasury. Along with that, they've also got 84 million in cash and cash equivalents. Now, we're talking about a company 18 months ago that had 160 million of debt on the balance sheet. And they've turned that around by getting rid of that debt. They've got 4 million of debt left now, which they expect to be cleared by the end of February. So it's just been a total turnaround story for Bitfarms. And we know they've got a big order in to get to 17 exahash. And if they can utilize some of the other machines, that gets them to 21 exahash. So we know they're looking to get into that, that sort of, I say top tier. I think it's like the tier behind Marathon, but they're trying to get in there, and it looks like they'll achieve that in 2024.
Yeah, really a runaway month for Marathon, Anthony, and I'm glad we spent some time on that. I know the Marathon fan base or investor base is very passionate about the company. I will let everyone know, just take note of whose logo has the pig already in it here, you guys. McNallie Money was on the Mara train long ago. But I'd be curious to hear everyone's thoughts on the performance in December below, and if they anticipate Marathon to continue at that pace moving into halving and into 2024. But blockbuster month, and congrats to anyone who's holding shares of Marathon, along really with most of the other miners on this list, have seen nice share price gains in the month as well.
Yeah. Quick look at CleanSpark. They had a great year, 2023. Increased their hash rate from just over 6 exahash, finishing the year over 10 exahash. Only Marathon Digital and Core Scientific actually mined more Bitcoin from the North American miners. So they mined, just under 7,400 Bitcoin for the whole year. Looking at December, 720. So it was a record for them in December. That was an average of 23 a day, and they've increased their HODL again. So they only sold 293 of their 720. So they've increased the HODL. Now they've got over 3,000 Bitcoin in place. So that gives them a good amount of value going into the halving. Their Sandoval's expansion is due to, from a building, it's been completed. The miners are in Georgia now, and they'll be starting to be placed in that facility with a hope to energize in February. So that's going to be probably about 6 weeks behind their end of December date that they originally gave. But we're given the benefit there. It's only 6 weeks away. So we'll get them up to 16 exahash, and they've still got some massive plans to go further, because on the 8th of January they went and unveiled their order for the future, and it just got really, it's starting to get a bit silly now with some of these order sizes coming through. Everyone's making use of that price for the Ant-Minus S21, which I'm hearing is now increased significantly. So miners going out there trying to buy that same machine now are probably going to be paying 10-15% more for that mining machine than some of these miners, maybe even significant more than that. When you look at the discounts have been applied, I saw an article yesterday saying you're now looking at $23 an exahash. Some of these miners were getting these machines at about between $14 and $16 a terahash. So CleanSpark have ordered 60,000 units, and that will take their hash rate from where they plan to be in 2024 of 20 exahash up to 30 exahash. And then they've got an option to buy another 100,000 units, which is a further 20 exahash, and that takes them to that sort of, we're now saying the magic 50 exahash number. I mean, that number keeps changing every podcast at the moment, because not long ago we were looking at 10 being sort of like the magic threshold. Now we're sort of seeing 3 miners that are going past 50 with their orders. So Marathon, Riot, and CleanSpark are now looking at that 50 as a sort of like a number to try and achieve in the sort of like next, I'm going to say next 18 months, 2 years time. So they're sort of like future proofing their growth strategy at the moment. And yeah, it sets them up really good. Core Scientific, another good month for them. They've been consistent all year. I mean, we know they're in chapter 11 at the moment, but that's going to imminently change in the next week or so. They mined 1,177 Bitcoin, and they increased their daily rate by 20% on what they were achieving in November. Now, part of that is down to the fees and the price of Bitcoin, but the other factor is they've also increased their hash rate. So they received some more miners, and their hash rate now is increased from 15.2 to 16.9, and they have further orders in play that will get them to over 20 hexahash during 2024. And once they're out of chapter 11, that might give them some more ability to raise more funds to grow that hash rate. So they're in a strong position. I know the CEO, Adam Sullivan's, he's been pleased with the performance this year. They've got some strong cash flow now, and they've been able to sort of make some repayments on some of that debt because of the Bitcoin price being where it is at the moment. So it's been a good year for Core Scientific. I think 2024 will probably even better year for Core Scientific, because once they come out of chapter 11, it does release some of the holds that they've had going forward. DMG Blockchain, very quickly, and they put out an update. They mined 72 Bitcoin in a month, at a rate of just over 2 Bitcoin per day, increasing the November rate by about just under 8%, so a good month for them. They sold just 46 of their production, which is about 64%. And for a small miner, they've got 455 Bitcoin in their hodl. Now, bear in mind, I think there's only 9 miners who actually have a hodl of the public miners in America. And they've got 455 Bitcoin as at the end of December with a value just under $20 million. So that's a nice war chest for one of the smaller miners going forward into the halving, much needed. And they expect to, again in 2024, take that current growth. They plan to get to 1.2 exahash very quickly, and I think they're looking to double the hash rate to 2 by the end of 2024. So they've got some growth strategy in there, and we'll be monitoring how they do throughout the year. Hive Digital. Hive Digital had a good month, 282 Bitcoin. They only managed to have the same level of Bitcoin per day in December it is for November, because they had some maintenance issues, and so that they weren't able to achieve their full hash rate at some of their sites. So once that's rectified, they'll be back up to full operating hash rate, which is about 4.3. But their revenues for the month increased because of the Bitcoin price. Their revenue, even though they mined similar amount to November day by day, their revenues increased by 15% to 12 million a month, and that's because of the because of the Bitcoin price. They sold 72% of their production, so they've increased their hodl. They've now got about just over 1,700 Bitcoin in the hodl end of December, and that's got a value of about $72 million. They've acquired a further 7,000 S21 miners, and that will take them to a capacity of about 8 exahash. So already that's adding to the orders they've already had in place. So I think they've got something like about nearly 17,000 ASIC miners on order, and those previous orders would have gotten to 6.6 exahash, but this new order effectively gets them to 8 exahash. So that's a good target. And if you think about Hive, where they were at the start of 2023, just over 2 exahash, finished the year just over 4 exahash, so they've doubled exahash, and now they're talking about doubling it again in 2024, and miners have got to do that to keep up with the global hash rate. So that's good news for them. They're also expanding the HPC, so we've just talked extensively about the news from Bit Digital. Hive were really the first miner to declare what they were going to go down that route. So they've been testing for months now, and their tests have come back really positive. They've started to get some small amounts of revenue while they were testing, but now they'll be able to ramp that revenue up, and they're hoping, by the end of 2024 to get to sort of an annualized rate of about 15 million. I think we might see that number increase if the likes of other miners are achieving sort of 50 million. Hive have got a lot of these GPUs and a lot of the servers in place to maybe compete with some of the other miners. So it'll be interesting to see those numbers come out as we go through 2024. So we've on Hut 8 Corporation. This was their second update as now a joint company, and we've started to see their production rates by exahash start to improve, and we've seen that for about 4 or 5 months now. They've had a challenge all through 2023. We've talked about the issues at Ontario with regards to their power supplier, and we talked about the issues at Drumheller with electrical faults. So they've been operating probably most of the year close to only about 50 to 60% of capacity. So their production's been really down, but we're starting to see now, since that merger, since those new sites become available where Hut can repurpose and re-put their miners into new locations, that's increased their production. So we've seen they produced 453 Bitcoin. That was 12.5% higher per day than they were achieving in November. So that's a great position to be in. Mining revenues increased by 30% to 19 million. They've got something like 21 exahash in hosting, and I go back to the fact we talked before. We're not including the hosting in sort of like in the tables. Because the tables are really there to compare the self-mining companies. I mean, if we go back a couple of years ago, most of them were just really self-mining, but we've seen that sort of change this last sort of 12, 18 months where miners are starting to diversify. So we will start looking at how we're going to do that. They sold 387 of their production, so they added 66 coins into their hodl. They've got the second largest hodl of all the North American Bitcoin miners. Only Marathon, who've got 15,000, can compete with Hut 8. And if you look at publicly traded companies, Hut are probably in the top 5, from a global perspective with the size of their balance. Just to give you an indication, Coinbase, which is an exchange for Bitcoin, has 9,000 coins. And Hut's got 9,000, nearly 9,200. So they've got actually more than Coinbase, the exchange, has got on their books. So that's impressive. That's got a valuation just short of $400 million. So again, for that new company going forward, making deals, and they have been making deals. They've had some sites approved recently with regards to the sites that they applied, through Celsius, and the other sites that they applied for in Canada with their previous energy provider who went bankrupt, and those have come through. So there's a lot of potential this year for Hut to sort of like regain some of those highs that they were back in 2021 when, we talk about the Marathon fan club. Hut had a really big fan club back in 2021. They were one of the most actively traded stocks on the market. And so, this year, we're starting to see those green shoots in the last 2 months. Everything's coming out positive. It'd be good to see their next quarterly update, so the financials, so we can see what the merged company looks like from a revenue perspective, and start, highlighting those additional revenues that are coming in there. But yeah, a good month for Hut 8. Iris Energy, again, I'd put them in the sort of, certainly in the Hive and the Bitfarms category. Very solid month every year, so they get like another A-grade skill report for the year of 2023. They've grown really well. I mean, if you talk about 12 months ago, they had some real issues with regards to debt. They had over $100 million of debt, and their hash rate had then dropped down. They had to give all the machines back to NIDIG, and the hash rate dropped to about 1.7 exahash. They're currently back up to 5.6 exahash with a growth strategy to get to 10 during 2024, and I don't think it stops at 10. I mean, if you look at their site today, they've issued some photographs of the Childress site today online. It's looking really impressive. It's looking, as well as looking impressive, it looks well built as well. In comparison to other sites I've seen photographs of from peer miners. So looks like they've got a really good build there. They'll be filling the second facility with miners very shortly. So we'll see that 5.6 exahash increase. And as each building gets through its relevant stage that it's in at the moment to completion, they'll get to that 10 exahash probably closer towards the middle of the year. And that puts them in a good place there. I don't think it stops there for them. They've also got $10 million worth of servers for HPC. So again, we'll hopefully hear some positive news from a customer on that side and see those revenues start to appear. One criticism that some shareholders have of Iris is the fact that they sell their Bitcoin daily. But when you think about, what they do with that money, they grow. So if you look at January, 1.6 exahash, December, 5.6 exahash. So that's growing that hash rate back. At the same time, they've got zero debt on the balance sheet as at the last update that we saw. So we saw an update that goes back to June the 30th. Iris don't issue updates quarterly like the rest of the miners. Maybe they start looking at doing that, which will be really helpful from an analyst perspective, so we can see information, in comparison, far quicker. But we've had updates from the company who've stressed that again, the debt was zero going through. So if they've still got zero debt at the end of December, they're in still quite a very strong position, because that wasn't the case a year ago. They had over $100 million of debt. So they've had a turnaround year, gone from strength to strength, we'll see more updates from Iris, coming through with what they're doing there. So moving on to Marathon Digital, well, we've already talked about what month they had, and if you look at the sort of like the three big metrics that I put into my articles, I look at the production by exahash, look at the utilization rate. So basically miners have an energized hash rate, and then some of them will declare an operational hash rate. And basically, it's looking at how many Bitcoin they should have produced based on what the global hash rate stated at the time. So, there's an expectation that, they should have produced a certain number. And if you just take December for utilization, Marathon actually had nearly 104% utilization. So they were mining more than a miner should have mined, and that goes back again to the pool that they have. They have their own Mara pool, and so they don't have as much cost as other miners have. So miners will pay a cost of, between maybe 1% and 3% in terms of fees. Marathon have got their own pool, and therefore they don't have to pay those fees. So that gives them effectively more Bitcoin. Then there's another metric, which is looking at the revenue they've achieved through their hash rate. And they topped that one as well. So only Iris Energy was able to get within relative closeness to their number on there, but that was 3,171 per petahash. So, great month all round for Marathon. Let's see if they can do the same in January. They haven't shown that consistency for every month in December, but we've definitely seen improvements in 2023 that weren't there in 2022. So, 2022 wasn't a great year for Marathon. There were so many issues with waiting for sites to be completed and having machines sat around in garages waiting to be installed. But 2023 learnt the lesson, moved on. Great update, and we'll look at what they do in 2024. I talked about them acquiring the two sites in Texas, which is another 390 megawatts. That they'll be able to, have within their stable, and that's from Generate Capital for about $179 million. and that's now shifting the way they're operating now, as they're claiming it's a diversified portfolio, but it looks to me like they're realizing the benefit of having their own infrastructure and the control. So let's keep a watchful eye on what that does there. That 390 megawatts takes their overall capacity to about 910 megawatts, of which 45% is going to be owned by them, and they're expecting to get to 50 exahash in the next 18 to 24 months. So, this 50 number, the new magic number, until we get another update out in next month or the month after, it sort of future-proofs the next 18 to 24 months.
Well, and it's really interesting, Anthony. You talk about these purchase orders almost getting silly in a way, right? As we see these exahash numbers continually grow. And the other thing on the Peter McCormick podcast I was listening to the other day, it's really interesting how Bitmain came out with their pricing strategy for these new S and T21s. They actually undercut their own S19 model and really jockeying for position in terms of the hardware manufacturing side of the Bitcoin world heading into halving. So what we've seen is exactly that. People were picking up like $14, $16 per terahash. However, now we're starting to see that increase, and I would expect that increases dramatically in the next bull run here. So very astute comments there, Anthony, and really interesting to see how that whole world kind of behind the scenes is playing out. Obviously critically important as these companies place these orders.
Yeah. Riot Platforms, I'm going to say they didn't have their best month in terms of production. I mean, you're talking for a company that has 12.4 exahash. So again, only Core Scientific and Marathon can have a higher hash rate than those. They produce 619 Bitcoin. It was an increase in what they did in November. So they've had a few challenging months from a production perspective. What you've got to remember about Riot is Riot in 2023 really utilized their energy strategy. So they were switching off quite significantly during the months of June through to October, especially with the warmer weathers, and benefiting from power credits and demand response credits. So you look at the total what they received over 2023, that total was $71 million in terms of credits received. That's a significant amount. However, in December itself, they only received $500,000 in terms of demand response credits. So not a significant amount. That's worth about 12 Bitcoin. But when you consider CleanSpark, who've got a lower hash rate, they've only got 10 exahash, and they managed 720, and they were operating at 99%, then there is an issue with the utilization at the Whinstone facility in terms of power uptime there, because I can't make 100% sense of, yes, they're switching off, but they're getting no benefit for switching off if that's the case, or they're not able to actually operate at 100%. I mean, they have got a fixed price agreement for their power for 345 megawatts. So the 345 megawatts more than covers their own self-mining hash rate. They do have a hosting service there as well at Whinstone, and there is one or two large non-public miners that are being hosted there, Rhodium being one of them. I think they've got some like 3 exahash, and there's another couple of miners that were there at 1 exahash, and there are some legal issues going on with some of those clients, so I don't know too much more details about that. But it does concern me a little bit that the production in the months now where you expect it to rise when the weather's not as warm, and we're not seeing the massive cold spells of previous winters, why they're not operating at a higher production level. So hopefully we get Jason on in the next month or so and get him to talk through how he saw 2023 and how 2024 looks in terms of operational performance. We know full well that the company is going to grow massively. They've got the site at Corsicana, which is being built up now as we speak. So they're hoping to get 400 megawatts ready for that sort of middle of this year, and that will take them up to once they've got all the orders that the physical orders in that they've put in there, and their hash rate will go from 12 to 20, then from 20 up to 35 exahash once they've got all the ordered miners in place, and they've got another order of options which will take them to significantly higher than 50, heading towards 100 exahash. So they've effectively future-proofed their order position. We just want to understand why their production is not as good as some of their or most of their peer miners. And if you look at the 12 months of 2023, just from a production perspective, they were sort of like, they finished sort of towards the bottom of the table. But that 71.6 million of credits, when you put that into the pot, it does make their margins look really, really good. So there is some sort of like there is some green shoots to this story. It's just that we just need to know when they're not having to curtail as often, why isn't their production a bit higher? So maybe Jason can give us some understanding on that there. Moving on to SATO Technology. Again, this is a smaller miner, very, very consistent. So again, December mined 38 Bitcoin, a rise of about 5-6% higher than what they were doing in November. They sold 41 Bitcoin to cover their operational costs. They've got a hodl of 40 Bitcoin, about 1.7 million in value, plus another 1.6 or nearly 1.7 million in cash and cash equivalents. So they've got nearly 3.5 million in treasury there. And they're a small miner, doing things right at the moment, growing when they see the value there to grow. And hopefully we'll see some growth in 2024. It's going to be a challenge for smaller miners going into the halving, but the Bitcoin price at the moment, if that keeps going in the direction the ETF gets approved, we might see a lot of these public miners, last longer than some people are expecting them to. Finally, we've got TeraWulf. So TeraWulf, had a good month. 334 Bitcoin, increased their daily rate by 6.5% from what they were doing in November. Again, down to the increase in fees. Utilization was at 92%. They had a couple of maintenance issues there, but that brought utilization down a little bit. Self-mining revenues, though, if you look at what they actually received, in revenues, just over 14 million. So that was an increase of nearly 2 million on December. So that's a nice 16% an increase, and that was pretty much across the board. Some of these miners were getting, sort of between that 15, 25, 30%. Marathon was 75% higher in revenues in December than they were in November. So that was just a whole different ball game. So, we talk about rises here. When we mention Marathon, it's like league, Premier Division, or whatever you want to call it. So it's good thing about TeraWulf at the moment, they've got the expansion in place now. So building 3 at Lake Mariner is going to be filled with 18,500 S19 XPs by the 1st of December. That'll take their hash rate up to 7.9. And they're now already starting on building 4 at Lake Mariner, and they've got an expectation to get to 10 exahash again, probably towards the end of this year. So that's another miner getting to that double-digit exahash. So we've talked about Bitfarms, we've talked about obviously CleanSpark have reached that and are going ahead of that. Iris Energy getting to 10. I expect Hut 8 to get to 10. We'll see an order come out from them shortly to get more self-mining machines. They're at 7.2 at the moment. Now TeraWulf are going to get to 10. So you can see that mid-tier miners all sort of exploding while the prices are good now, while the Bitcoin price is, again, at a decent level. Miner prices are low at the moment, getting their orders in. But they better get them in quick, because we know that the rate that people pay for mining machines is correlated to the price of Bitcoin. And we saw that in 2021, 2022, when some miners were paying $60, $70, $80 a terahash. And when you talked about these 3 or 4 big miners are only paying $14 to $16 now, that's a significant reduction in what some people were paying. And that's for less efficient miners back in 2021. That's not the S21, T21 miners. But that's just a rundown of the well, I say the larger public miners for December.
Yeah, excellent breakdown, Anthony, and a lot of good context there. I appreciate you walking through each one of them. You're right with TeraWulf. We've got Paul Prager, the CEO, on next week. We're going to talk about the Lake Mariner build out and some of the expansion going on there. And as you're talking, I'm thinking pretty much everything is lined up for these miners right now, aside from network difficulty. And then a couple months out, we've got halving. But in terms of purchase price for these new orders, they've got the Bitcoin price moving, you've got the ETF momentum. I think a lot of things are really lining up favorably for 2024. So that's the main table here, you guys. A lot of information, so feel free to pause and go through for your favorite miner. Let us know in the comment section below which one of these really stood out in your mind. Maybe aside from Marathon for the month of December. And then Anthony, I know you brought along some of your supporting tables as well. So we won't spend as much time on these, you guys, but let's walk through these quickly. Maybe call out a few key takeaways or highlights for each one, Anthony, and I'll flip it back to you.
Okay, so we've got the first one to look at is the graph ranking the miners by the utilization. So this is what they should have mined based on their hash rate in place compared to what they did mine. So if you do what you're supposed to have done, 100% should be what you come out with. Only one miner achieved 100%, and we've already explained Marathon Digital had a fantastic month, nearly 104%, so they came out top. But you then start seeing the miners where you expect them to finish then. So the likes of CleanSpark, the likes of Iris Energy, both achieved 99% utilization. So again, really, really, really good numbers. SATO Technologies came in at 97%. And to be honest with you, 11 of the 13 miners were above 90%. The only challenge was again, we just talked about recently, was Riot Platforms at 69%. So operating at 69%, only got 500,000 in demand response credits. There's a query there as to why that wasn't higher. So, hopefully they'll come out and explain more detail on that on a podcast soon. Moving on to the next slide, production by exahash. Again, Marathon are going to be number one in most of these slides. But Bitfarms had a consistent month, and they were at just under 72 Bitcoin per exahash. Iris Energy, again, SATO, Hive, these same companies, CleanSpark, are also there, and DMG making up that top group. Core Scientific, again, only literally a couple of percent lower than Bitfarms. But if you're looking towards the end of it, Riot at just under 50 Bitcoin per exahash, that's 40% lower than Bitfarms were achieving. So that's a significant amount. Moving on to Bitcoin sold as a percentage of the production. So we know 2 years ago that most of these miners were hodling every month, saving that hodl, waiting for the Bitcoin price to get to six figures. But in 2022, we saw that change. We saw miners starting to sell. In 2023, we started to see some of the miners start to hodl a proportion of their Bitcoin going through now. And this month itself, Bit Digital only sold 22% of their production, so they grew the hodl significantly. Marathon only sold 38%. CleanSpark only sold 41%. So CleanSpark's hodl's gone from about 200 at the start of the year up to 3,000 at the end of the year. That's a significant increase. DMG, again, a small miner, only sold 64% of their hodl. Got a nice hodl of 455. Hive and Hut and Riot all sold less than their production numbers. But then you look at the likes of Bitdeer, you look at Core Scientific, you look at Iris Energy, you look at Wulf. They made a point of selling their production. And again, some shareholders will say, we want miners to hodl, but they're selling production and growing hash rate with that growing hash rate and not having to go and borrow against it. So that's a positive thing. If the likes of say Iris and Bitdeer can grow their hash rate and then quicker by utilizing the money now and then achieve more Bitcoin later on, then that's where the value lies. So there's no one right way of doing this. Albeit saying that, Marathon is sitting very pretty with over 15,000 on their balance sheet with a value of $650 million. So it does look quite favourable for some of the miners at the moment.
No kidding.
And
And it is really interesting this year to see the strategies kind of diverge between 100% HODL for every company to a hybrid model to even Iris that doesn't have any HODL, right? So we'll see, time will tell as the Bitcoin price changes here, which strategy proves to be the most profitable for shareholders, but really interesting dynamic evolving there.
yeah, next slide is just basically the BTC Mined. So again, Marathon were head and shoulders. Probably should have been on another graph. Core Scientific had a good month, just short of 1,200 Bitcoin. CleanSpark claimed that third place, took away from Riot. Riot had, 619 Bitcoin, so not as high as what we'd expect from them. And then you have this sort of like these mid-tier miners, the Huts, the Bitfarms, the Bitdeers, the Iris Energies, the TeraWulfs, all in that sort of 350 to 450 mark there. At the bottom and then there you've got DMG at 72 and SATO at 38. Both of them, got relatively no debt on the balance sheet, so financially in a really good position. Small miners, the challenge is how quickly they can grow. That's the issue for them smaller miners. That's going to be the problem going forward through the halving. Is what's their growth expectation? But I'd say looking at most of the miners in there, it's been a good 2023 up to now. The final slide is the revenue by hash rate. So this takes all the self-mining revenue, and we need to think about whether we can incorporate some of the other revenue streams into this particular slide to make it maybe more apparent that some of the other miners are doing other businesses. But again, Marathon, steamed ahead with $3,171 per terahash, followed by Iris Energy, followed by CleanSpark, and followed by SATO. And then at the other end of the graph, again, Riot were only able to achieve just over $2,150 per terahash. So again, it highlights there is some sort of a potential issue there at Winstone.
Great.
So that's where we are with the graphs. Yeah.
Yeah, really helpful, Anthony. I love how you laid them out here and good angles. The one thing we talked about in our last video, you guys, each one of these graphs represents one specific metric, so don't take it by itself. This is a point in time or a snapshot in time for a specific metric. If there's other metrics or comparisons you'd like to see, again, feel free to leave them in the comment section below. Anthony, overall, December was a really strong month for the Bitcoin mining group as a whole. I expect 2024 to start off in a similar fashion. We appreciate your time. I know you put a lot of effort into these tables and the analysis, which we all benefit from. So thanks so much for being with us today. You guys, if you're still watching, hit the like button. It's free to do. It helps get this content to other people who may find value. Subscribe to the channel, McNallie Money. Anthony also launched his Patreon group. It's over 100 members now, so feel free to jump in there as well. There's a little bit more behind the scenes and personal access than we can do on the YouTube platform. Anthony, with that being said, I'll give it back to you for any closing thoughts, and thanks so much for joining us today.
Thanks, Bryce. One closing thought I do have, and you've just alluded to it, the fact that about do not take these metrics in isolation. If I was to draw a graph there by gross margin, Riot would probably, for 2023, Riot would probably be the highest, of all the miners. So, we might have looked at them from production in recent months, but with those credits, their mining costs have been significantly reduced. So their margins are significant, and I mean significantly lower than everybody else's. The graph would look the inverse of where it would be at the moment. So you can't take one metric in place. Once the results come out, I do some big comparison metrics. So we cover maybe 10, 12, 15 different metrics. That gives you a more rounded position, but don't take 3 metrics from this article into and expect to be able to formulate which of the miners are stronger than each other. This is just a starting point for anyone's due diligence. It just gives you a little bit of a head start, then start doing some investigating through the links to each of the miners' financials. Go through there. There's lots of information there. Everything's in the financials. They don't hide. There's no secrets there. You can find the information. You just got to be able to find it. It'll be in that 200 pages document, but everything's in there. So, as I say, don't take one metric in isolation. Have a rounded knowledge. All the very best for 2024.
Great. We look forward to the January results, and we'll talk soon.